Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, November the 16th, the year's 2020. Let's talk trading, taking what the market gives with Walmal. Before we get started, a reminder, these videos are for educational purposes only, and your results may differ from mine and from Walmal's. Walmal, what have you taken? Has the market given?
The market's gained today, and it's been for me anyway. It's been a very, very good morning, and I hope that it's been a good morning for all the other traders out there. And if you're just starting to trade, that you'll be profitable in all that you do. But last week we talked a lot about this idea of big pips, little pips, and sometimes it's good to take little pips, and this week, or at least for today anyway, I've taken not too many trades, but I'm up pretty big because I've had lots of big trades. One trade I went and got 14 pips on it. Another trade, 12 pips. Another one was that was actually split between two trades, but it got 17 pips on it. And I think that's the thing that's really important about this is that you need to be there watching the pairs and watching the market and watching what it's doing so that you're able to take what the market gives you. Because that's the most important thing. Whatever the market gives you, that's what you take. The market's only giving you a pip or two, you take a pip or two. If the market's willing to give you more, take more if you can. But you got to be sitting out there and watching what it's doing and paying attention,
Well,
to what's actually doing.
I can hear the questions people they want to know right now. Well, how do you know? How do you know what the market's giving? I'm up 2 pips. How do I know it's going to give me 5 as opposed to drop 5?
There's 2 answers to that question. Well, actually 3 answers to that question. The first one is you really don't know because the market's going to do what the market's going to do. Okay, so just put that on the table right away. I could be sitting there and expecting the market to give me, 5, 10 pips, but it may not. So, that's part of trading. So that's the harsh reality. Answer number 2 is, and I say this all the time, you really need to be trading one instrument. And I don't care what that instrument is. I don't care. I've traded the pound dollar. You could be trading euro dollar. You could be trading, the dollar yen. I don't care what it is, but get to know the pair and know what it does and how it reacts to things. Because if you know how it reacts to things, hey, I've seen this before. Ding, 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 I can stay in this trade. Or ding, 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 get out. Because when the market does this or when that particular instrument does that, it has, it tends to turn on you. And you get to know that, I'm going to say it this way, you get to know that animal because it's a living, breathing thing. And so you really need to be doing that. And I know there are people out there that say you can trade any pair, anything, all the time. And I agree with them that you can use these concepts of line trading or horizontal line trading, on any instrument. Absolutely you can. But the thing is, there's a second part of it. You need to understand the particular instrument that you're trading. Because, if you understand the instrument, you know that, hey, this thing's just not doing things right. And then the third thing, which I really should have said first, or said it before I said the second thing, and that is, hey, if I'm in a long and it's going up, stay in the trade. If it stops and it starts to come down, now it's time to start considering maybe it's time to get out. So that's how I make my decisions anyway.
Well, I just put up the 1-minute chart on the pound dollar because if you look at it, it crossed the 90 line, then it kept going up. But if you look back here, it crossed the 90 line and went up to 92 and pulled back. But if you kind of look at the candles, you can see it was kind of in this little range here. And then it came up, it crossed the 90, didn't get quite as high, turned around. But then the third time, you see, it reversed up, came across, closed above. Now, you could have just taken your 1 or 2 pips there, but if you waited, you say, wait a minute, now it made a new high, higher low, higher 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 high, higher low. Then all of a sudden it broke a low right here. And if you just sat there and just waited, let each 1-minute candle close, in that case, the market told you when to get out. Now, if you're just looking at what just happened, the market came right here. This is off of a 3 ball. if we would have taken that short there, you'd be looking at a possible, anywhere from 5 to 10 or more pips, depending on how you took that trade, or if you wanted to ride it. And that's
exactly right.
And so if you just look at the chart, you have to look. Of course, you look at it live, but the thing is, and you can do all the hairy hindsight. So if we look at it now, you can see it's pushing down. It's pushing down. So when it stops pushing down, it's going to make what Walter and we've been calling a box here. It's basically a range between the semaphores. And so when you see the semaphore range drop down to about 5 or something, or way, somewhere between 0 and 10, usually that's when things start to compress. And once they start to compress, sooner or later they're going to expand. And that's what happens. So you see, 2 minutes ago you have a big long bar. Now you've got another one, but it's shorter. Now you're making even a shorter. What's happened? Price is compressing once again.
Yeah. Now the thing is, it may go back up there. It may continue going down. I don't know, but we got to wait for it to go and make that decision. But talking about that trade on the way up that you listed all those things, you could have got into that trade somewhere around 92, somewhere around there. And if you just followed that logic that Avery just went and just laid out there, and then you got out when it finally went and broke the low, you would have picked up 8.5 pips. That's not bad. That's good trading. And the nice thing about that is, because you have that 3 ball on the top, and we've talked about that in the past, if I all of a sudden now go and get a lower low, okay, and I jump into that trade, let's say I wait for the entire 1 minute after that 3 ball to go and close, and then I go and take the next break of it, well, I could have run that down again for, right now, 13 pips, 14 pips. And notice, we've got lower lows right after each other. We've got lower low, lower low, lower low, all the way down, and no higher highs. That means you're still in this trade. So you could have picked up another 13 pips in that direction. Today, the market is moving like that, and it's doing it very nicely. It's just going down nice and smoothly. I love days like this because these are the days where I can make a lot of pips with relative ease. It's not like it was on Thursday and Friday of last week, where it would go and make this run of 13, 14 pips, but what it would do is it would sit there and it would crack that lower low, and you'd say, okay, I'm still in the trade. And then the next thing you know, it goes and just jumps up 4 or 5 pips against you. And the next thing I got beat by that once or twice. So that told me, okay, that's just how the pound is reacting today. That's what it's doing. That's okay. I know it's doing that. So what I'm going to do is, as soon as I go and get my 2 or 3 pips, I see it stop, I'm out. And that's why I traded the way I did on Thursday and Friday. Today, it's not doing that. Well, guess what? I'm going to stick it. I'm going to stay with it until I go and get a candle that goes and has a higher high. So imagine I went and got into this trade at 95. 95.6 would actually be where my entry is. Like, if I could get into that trade at that time, I would still be in this trade right now until this 1 minute candle closes. And just stay. Like I said, you'd be up 13, 14 pips at this point. I'd probably be thinking about getting out right now only because I right now didn't have a higher high, but I also didn't have a lower low. And so I'd sit here and wait and see what this particular candle does. This candle turns green, I'm gone. The candle stays red, I'll stick it and I'll stay with it.
And so now now it's just making a lower low. We've got 25 pip range on the semaphore. The price is 0.8, 0.6 above that last semaphore, now 0.3. That's how you can use the modified semaphore indicator. That's why I put the range in the distance, because you want this, if you're doing a reversal trade, you want this distance to be, say, no more than maybe 2 spreads. So right now you can see the spread's about 1.4, maybe 1.5. So if I want to get in a trade, I want this number to be somewhere 3 or less. And that way, it probably won't hurt me too bad, because you put your stop in there, but it'll give me, say, the next because the next 1 ball right now, if a 1 ball was to appear, it would be you take 1, 2, 3, 4, 5 candles. The one ball would be right there, somewhere in this area. So, and then for every new candle, then it would drop until you can count to 5. And so that way you can see where, hey, you know what? If it at least makes a one ball, I might be able to take a pip or two and then get out of the trade, depending. If it's moving like this, I would want to get out. But if it's moving like this, I want to stay in. And I think if you watch a pair long enough and you can just see it, you know, this is just dropping. You know, it's not ranging, and that's what you want to see. So let it do that. And then if you get a signal to reverse, like we use our DSR type of scalp trades, we're in the rat zone here, 16. We're also in the smart rat zone, and we can then see if we can see a long entry. But you know, the H1 just went red right here, and so now you can kind of just sit on your hands. It's in the rat zone, and for the rat zone traders, this is a perfect opportunity. We're in the green rat zone, but we're near the end of the hour. It's like, sit on your hands, and even if this thing goes up and you don't get the trade, that's okay. You didn't get a loss, because the worst thing is to rush into a trade only to see it drop against you another 10 or 20 pips.
All right. So right now, I wouldn't be out of this trade yet, but I'd probably be thinking about getting out right at the close of this candle. I'd be out right now is where I would get out. And the reason why is because that candle went and closed above. So that tells me, okay, this rundown is over, you know, or potentially over. I mean, we don't know anything. But I would walk away with 15 pips.
Right.
Nice little pickup.
I know. It's like right now, it's crossing that 80, which is the Walmal line. I'd be tempted to jump back in. It would have been worth 2 pips right now.
Right. Exactly. You know, and the thing is, you know, I would actually jump into this trade on a long, probably right at 80 actually is where I would have jumped in.
Yeah. And
you could have gotten 2 or 3 pips, and I'd be weary about staying in this trade only because of how strong that rundown was. So it's the type of thing where I'd still be in the trade right now, but as soon as this thing goes against me, you know, I'm done. I'm out. I'm out quick.
When you say go against you, you mean you take some profit off the table. You don't mean stop loss, right?
Correct.
See, like right now, I'd be out. I just saw a one ball.
Yep, I just got the one ball as well.
Yeah.
And so now you're starting to say, what do for that trade, you'd be up 5 pips. Is it time to get out?
Yeah.
Well, here's the thing. It's still moving up, so I'm not out yet. I'm still following it, you know. So, you know, now I'm starting to say, okay, I'm out. You know, that's what I would have done in that situation. You know, because we're starting to, you know, we got a red candle. You know, it's time to go.
Yeah, I was going to say real quickly, showing the traders here. You see about where price stopped, where the support resistance, the dynamic support resistance, it hit it and reversed. So these are what you can call target areas, and that's why when we say look to the left, you look to the left on the chart. Okay, go ahead. We've got like about 30 seconds. So take the next 30 seconds.
Yeah, it's funny that you kind of said what I said. If you look to the left, you see that one ball and you see that 2 ball. Well, I knew that, you know, that area right there to the left there is, you know, that's a trouble zone. So if it does not get past there, get out, you know, because now it's going to either box or reverse off of it. So you just know that that's going to be a problem. And this trading game is just that. It's a thinking game. I need to be thinking, okay, where am I going to run into problems? What is price doing? I got to be watching what the chart is doing. Oh, it's going up and making higher highs and higher lows. Hey, stay in it. You know, even if I am in a trouble zone, okay, it's still going up. Oh, it's now starting to go and create a box. It's starting to stall and not do anything. Okay, maybe it's time to get out, because you know what? I got 5 pips in my pocket. Why do I want to throw 5 pips away?
Yeah, exactly.
Sure.
It's so.
Sure, it could go on to 17 pips.
Yeah. Okay, well, fellow traders, that's the fastest 15 minutes in trading. I hope that helped. And just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.